Well, good morning, folks, and welcome to the daily report for today. It's the last day of the week, and I'm sure many of you will be looking forward to the weekend. What a frustrating week it's been. Some of the trades that we've taken in the trend direction, which is bullish for both the pound and the euro, haven't run their distance, or they've been half-size trades, and because of the larger stop losses, haven't been able to realize their full potential. And a lot of the counter trend trades have gone for 30, 40 pips, but because of the exit rules of the G7 system, haven't really been able to produce any meaningful profit. I've just closed two trades right now for around about 50 pips each on the euro and the pound, but I'm still slightly underwater for this month, so little sort of joy in that. But let's have a look at what's going on, and I'm going to switch to the euro weekly chart right now, and it's really not a lot to comment about this, except for the direction is long for both the pound and the euro. And I want to point out a few interesting things which are going on as well at the same time, which have contributed to this pretty difficult trading period, really, overall, with very, very significant trends on some currencies and key levels that we've reached. But here's the euro weekly chart. You can see last week had a higher high, higher low, and there's no dispute about the direction of the euro being bullish. However, you'll notice on the weekly chart that the stochastic is very overbought and well above the 80 level on the euro weekly chart. And this is a fairly rare occurrence. And if I reset this, you can see the last time we were overbought was, in the middle of last year. And we were oversold at the beginning of this year. So these overbought and oversold conditions on the weekly chart don't occur very often. And often they do result in a reversal of direction. You can see there, for example, and here, where the euro reversed direction. Not so much there, but over here, an overbought situation and reverse direction. And there, for example. So not always, but often it results in a reversal of direction. We're very overbought on the euro, and if I put on the weekly Fibonacci retracement, you can see that we've actually moved above the 61.8% retracement, and perhaps we're heading up to 1.45. We're at 1.4-ish. I think we got up to 1.41. So it's possible that we could move another 400 pips higher. On the other hand, we're very overbought on the stochastic. So having said all of that, it's pretty interesting. And if we go back to the hourly chart, you can see there's been an opportunity once or twice to buy the euro on dips, but not very often. You can see we had a chance there which yielded 100 pips, but on a small position because the stop loss was quite big. So we had to cut the position size. And that's been about the only opportunity to buy the euro off the 200 period moving averages in any case since the 10th of September. And so more than a month ago. And you can see we've just moved upwards. We sold the euro yesterday somewhere around the top here. It's moved down, but again, hasn't been a sustained move lower. Moved about 50 pips, and according to the rules of the G7 system, I've just closed because the last hourly candle closed above the high of the previous candle. So where to with the euro? Well, we need to continue to look to buy into dips, but on the other hand, the higher probability trades are probably counter trend, as strange that might sound. So I'll continue to look for opportunities to sell the euro, and I'm going to keep a careful eye on that today. Often on a Friday, you get some pretty big moves, and often you get reversals in direction as the week closes off. It's also the middle of the month, so people will be looking to perhaps take profit on the long positions. We'll see what happens. So that's the euro. If we scoot across and have a look at the pound, on the other hand, pretty similar situation. Again, we sold the pound at the high there yesterday, and it's moved down, and I've just taken profit about 50 pips as well. But you can see that move hasn't been sustained. It's not been a very long move. We've had a couple of opportunities to buy the pound on several occasions. The pound's actually been way more profitable than the euro. In fact, net overall, the pound's been quite good this month, but the losses have mainly been on the euro. And you can see we've had some chances to buy into the dips, more so than the euro. There've been opportunities along here, and we've traded the pound both long and short. And by and large, most of the trades have run for a decent profit. We've had a few hundred pippers, and the 50 pipper yesterday, or closed out today. So same thing though, the pound's long for the week. Let's just have a look. and get the weekly chart up on here for the pound, and let's see what it looks like. So if you have a look here, you can see again the pound is bullish. Last week was bullish. We had a higher high, higher low. That red line is the weekly reversal level. During this week, we just touched that weekly reversal level, but didn't break through it, and so we remained bullish, and you can see we've moved to a new high. So we continue to look to buy the pound into dips, as we've had the opportunity to do so recently. If we have a look at the hourly chart, you can see that we've moved down, not very much, and now we're beginning to move higher again. And just like the euro, I'll be looking for trades in either direction. If we can get a decent drop in the euro, the pound might follow, and we could get some good trades. And I need to carefully look at these currencies as the day progresses. Same story for the pound. It's the middle of the month, it's a Friday, often we get some good moves. What's causing some of the chaos in the market? And I want to show you two particular charts which will be of great interest to you. And the first one I'll put up is the dollar yen. And this is quite remarkable, really. There are two currencies which have been particularly interesting, and this is one of them. And I'm going to put the dollar yen weekly chart up here for you, just to show you the interesting moves. Now, in fact, what I'm going to do is put up a monthly chart because it goes so far back. So let's just put the euro dollar yen monthly chart. Now you can see the last time we were at this level, and we've reached into the 80s, 80 I think was the low. The last time we've been at this level was in fact in 1995, and it's only ever been there once. So we're at an extremely low level on the dollar yen, the lowest since 95. That's 15 years ago, and it's only ever been there once. So very interesting. Often there have been interventions by the Bank of Japan to prop this pair up, in other words, to weaken the yen, and to buy the dollar. This is the dollar yen, so there have often been attempts all along here to weaken the yen and buy the dollar, and so be interesting to see if we get another one of those interventions. It's really not worth trading at the moment. It's really too difficult to buy this pair because of the prolonged move down, and it's also difficult to sell this pair because if there is intervention, and there have been a few attempts over the last few weeks, then the sudden moves higher can easily go through your stop losses and not trigger them because of the sudden moves in the market, and the opportunity for the brokers to take you out at the correct price becomes diminished, and so difficult to sell because of the risks of your stops not being honored and losing more money than you want to, and also of course the risk of intervention is always there. So difficult to sell, but also difficult to buy because we've just continued to move down, and I guess we're going to be heading towards the 80 level, but it's a currency that I wouldn't touch. So this very extreme move in this pair, and consequently in the yen cross rates, euro yen, pound yen, has created quite a lot of turmoil right across the board. The other interesting one is the Aussie. And I'm going to put the Aussie weekly chart up here for you, or thereabouts. Okay, I've got the monthly chart. Now have a look at what's going on here. We're just about at parity. In other words, in fact, we may have just touched it yesterday. I think we just fell short. Let's have a look at the high. 9994. So just a couple of pips below parity. Let's say it reached parity. Let's have a look at the longer term picture on the Aussie, and you can see, in fact, as far back as my charts go, that we've never been this high. The Australian dollar is as high as it's really effectively ever been against the US dollar, and so this is really an extreme move. And if I draw a line across there, the question is, are we going to get to parity again over the next few hours or days? Are we going to try and breach that level? And if it does happen, is this going to be a prolonged, sustained move up above there? Either way is possible. I don't trade the Aussie dollar, but just an interesting chart to explain and to illustrate the extreme levels that the charts are at right now. Probably the safest two pairs to trade, coincidentally, are the euro and the pound, because They're not really at extreme levels. They're yes, they're overbought, but remember the euro's been up as high as 1.6, and we're at about 1.4 now, and the pound's kind of just in the middle of its 20-year range. But these two currencies, the Aussie dollar and the dollar yen, or those two pairs, should I say, are at extreme levels, and this will create a butterfly effect through the markets and create difficult trading conditions, with the euro and the pound probably being the easiest. So just an interesting set of circumstances right now, and perhaps more difficult to trade than normal. It's been a frustrating month because of these sort of factors and the factors that I explained earlier, and so I'm still hovering around about, well, just below break even for the month, and I'm hoping for a couple of good trades, perhaps today, perhaps in the second half of the month, to end up this month with a fair profit. It's been frustrating. It's been quite action-packed, quite a lot of trades, and a lot of losses. Most of them made up with big winners, and that's the whole point of trading, is to have tight stops and to let the winners run. And a whole bunch of losers that we've had, by and large, have been made up with the big winners. And thank goodness for stop losses, and thank goodness for the policy of letting profits run. The only frustrating thing about letting profits run is that often a trade will go into a fair amount of profit, let's say 30 or 40 pips, and because we're letting that trade run, it'll come back and stop us out at break even or even at a loss. But it's still got to be done. You need to take advantage of the runners when they run, and you can't take little bits and pieces here and there because they won't make up for all the losses. So that's the scenario. Continue to trade. Might have to be a little bit more aggressive this month because of the moves, but make sure that when you have a loser, you stop it out for a small loss. When you have a winner, let it run, and don't get too frustrated by the repeated losses, as long as you pick up the slack with the big winners. And that's the scenario, and I'll let you know, of course, if there are any trades today. I'm hoping that there'll be some good ones. If not, so be it. We'll come back next week and look for some opportunities next week. So take care. Remember, these are difficult conditions, and so you need to be prepared for more losses than usual, but when you do take losses, make sure they're small. Don't be tempted to hang on to losing trades, and make sure that when you get a winning trade, you give it every opportunity to reach its full potential. We have a session on Tuesday as normal, and apart from that, have a great weekend, and let's see what happens today during the market time.